Tonight we're looking at how I learned investing if I had to start all over again. So if I had to start investing from scratch today, I would do almost everything differently. Did you hear that? If I had to start investing today all over, I would do almost everything differently. You know why? Because I wasted years, following hypes, losing money to all kinds of questionable schemes, and trusting the very wrong financial advice. But if I could go back, I'm going to tell you exactly what I would do instead to build sustainable wealth in 2025 challenging economy. So there are 3 critical mistakes that most new investors, because I like that in recent times, there have been lots of interest in investing, and rightly so in recent times. But so many people ask, how do I invest? How do I start investing? Where do I begin from? How much do I need to start? So all those questions, I receive them every single day. And I'm actually happy because it means that people are waking up to the incredible opportunities in the world of investing. And I made so many mistakes, which I'm going to share with you so that you don't make them. Now, here are 3 critical mistakes that most beginner investors make. So the very first one is that they chase unrealistic returns. It's a big mistake. They chase unrealistic returns. Please type that in the comment section. Unrealistic returns. Betty says, you love my background. That's great. That's fine. That's in front of my house, and I like this tree. It's the neem tree, and that's the street light, just in front of my house. Okay, solar light. Thank you, Betty. Now, 3 deadly mistakes that most new investors make. Number 1 is they chase unrealistic returns. I made that mistake as well. When I started investing over 2 decades ago, chasing unrealistic returns. And some of these unrealistic returns were crafted, Ponzi schemes. I fell to so many of them. There were genuine multi-level marketing opportunities that I joined when I started. Like the first multi-level marketing organization that I joined was in the United States. So I was in New York when Joan Edwards, who was my upline, approached me and then shared the Amway opportunity, and I joined Amway. So I had my upline in New York, and then we used to have these weekly meetings, and we're still in touch, today. That was early 2000s. That must have been like 2003. Now, while I didn't make a lot of money from Amway, I learned a lot. Actually. It was the foundation for my eventual success in selling and in marketing. But you see, many new investors fall to Ponzi schemes, to fraudulent schemes. In fact, literally everywhere I go to speak to people, I do an interesting exercise. I ask people, how many of you have lost money to one fraudulent, to one scheme, to one scam or fraud or the other? When I do that in Nigeria, many times 100% of the adults, at least anybody who is 18 years and above, has lost money in Nigeria to a fraudulent scheme, to a Ponzi scheme. So many of you remember, was it MMM? Then there's this other one, Chin something. Okay, just type it in the comment section. If you've lost money to any of these fraudulent schemes, where they promise you bring in 100,000 naira and then every week we'll pay you 300,000 naira. So that is one critical mistake that most new investors make. The second one is that they invest emotionally. New investors invest emotionally. So sometimes they even borrow money. There was this popular story last year about a popular pastor who was condemning the Nigerian stock market because he said he borrowed, God knows, like 300 million or something like that, and then put in the stock market, and then he lost the money. How can you borrow 300 million to buy in a stock? That's emotional, and that's also greed. Okay? Yeah, so people are typing, all the schemes that they have lost money. Chinmark, all right? Then this other one, MBA Forex. So many of them. Stephen talks about FFCB. Yes, type all the schemes that you have lost money in. All of you, just type all the schemes, and then you can go through the comment section. Just look at it. Just look at how people are losing money. And then, even as I'm talking to you right now, there are still schemes like that where new investors are losing money. Helen says she lost money to Solmax. So many of them, so many, I don't even know their names. I'm hearing about Solmax for the first time. And then many of these things still exist. Okay, so the second mistake is new investors invest emotionally instead of building or investing based on fundamentals. They are investing based on the hype that they see or they hear on social media. Another common mistake that new investors make is they blindly follow other people's strategies. And sometimes they blindly follow strategies that work abroad that do not work here. And then I'm actually amazed that many new investors prefer to invest in the US and European stocks than in the stock exchange in their own country. Why that is actually, I will encourage that, because that helps you to kind of hedge your currency when you can invest in US stocks and things like that. But if I'm starting all over, I won't start with US stocks. Never. I will not start with US stocks. I will start with the stock exchange in my own country. Learn it. For instance, the Nigerian Stock Exchange has about 155 listed companies, about that, 150 something listed companies. But in the US, the NASDAQ has more than 3,000 companies. 3,000 companies. And then the kind of research that you typically need to do to determine what companies to invest in, what sectors to invest in, it's harder to do it for 3,000 companies than to do it for 155 companies. Now, when I master the Nigerian Stock Exchange, I can begin to invest in the US and then US Stock Exchange. Okay, New York Stock Exchange and then London Stock Exchange. Okay, so I learned these lessons the hard way, but you do not have to. So let me give you a blueprint of 3 steps of what I will do if I am learning to invest all over again in 2025. So the step 1 is to protect my capital. I will protect my capital. That will be priority, for me. See, because this economy is very, very volatile. And if I don't protect my capital as like the very first step to make sure that I protect my capital, I could find myself in very, very difficult position to start with. So how will I protect my capital? I'm going to keep, some of you have heard about emergency fund. In the US, for instance, you can put your emergency fund, say, in a high interest savings account and all that. But here, I wouldn't put my emergency funds. The emergency fund is typically, when you think about what you spend in a month, your expenses in a month, or your typical budget for a month, what keeps your house going, food, transport, utility, all these things for 1 month, your living expenses for 1 month. The emergency fund, it means that whatever your living expenses for 1 month is, you multiply it by 6 and put away. This is when, if there's an emergency, like you suddenly lose your job, or somebody takes ill or something, you will have something to go for at least 6 months while you look for a different job or you start a business or something. But in Nigeria, I would even say, don't aim for 6 months. aim for 1 year. Aim for 1 year, because there have been people who lost their job and they've typically stayed at home looking for another job for 1 year, for 2 years. Do you know anyone like that? Just type yes. Anyone who lost their job. In fact, some people lost their job in 2020 during the pandemic, and this is 2025, 5 years after, they still haven't found their foot. So I would say, if you're keeping an emergency fund, that you aim to have 12 months of your living expenses set aside. This time, I will not put it in the savings account. Like in my own case, I actually put it in my investment. So you can put it in treasury bills, you can put it in mutual funds where you can easily access it. Okay? So what I will also do if I'm learning afresh is to diversify my currency exposure. In other words, I want to also include dollar-denominated assets. Dollar-denominated assets. So somebody put dollar-denominated assets there. I think having some kind of hedge against the foreign currency fluctuations. If you come from a place like Nigeria, if you can build some assets in dollars, it's going to give you a lot of stability. You know, there was a year that the dollar was, let's say, as of January, it was 150 naira to the dollar. Then overnight, like by March, overnight, it went to 300 naira. Then while we were still trying to catch our breath, it went to 400. While we were still trying to catch our breath, it went to 700. And now it's over 1,500 naira to the dollar. So that's a lot of erosion of your wealth. So if you're building generational and long-term wealth, something like that is a massive financial erosion of value. So if I'm learning all over, I would definitely want to have some dollar assets. And then, as a part of step one, that is protecting my capital, I will make sure to verify every opportunity. So some of you are registering with stockbrokers in order to buy stocks. And then you are not checking if these brokers are registered. So people have lost a lot of money because they are dealing with unlicensed stockbrokers, people who are not regulated. So sometimes your money can disappear and then there's nobody to hold responsible. So my first step will be to protect my capital, and I will do it in 3 ways. First, I'm going to keep 6-month expenses in liquid assets like treasury bills or money market funds. 2, I'm going to diversify my currency exposure. Okay, I'm going to get dollar-denominated assets so that I cannot be wiped off by the instability in the currency in my country. And then thirdly, I must verify every opportunity. I won't do all this hearsay, oh, there's this investment. If you put your 100,000 naira, they'll be giving you 1 million naira every week. No, I won't do that. Okay, so step number 2, if I'm learning all over again, is I'm going to build a long-term portfolio. So I'm going to be looking at minimum 10 years. We often think that when it comes to investing, we think that 10 years is a long time. But often people come to me, they say, oh, Ogbo, what stock can I buy today? And then in 3 months, it will double. No, that's not the way it happens. That's not the way investing in the stock market happens. So, but when you have a long term, when you have the long-term view, you can create incredible wealth in your investment. So, are you able to buy some high quality asset and then hold it for 10 years? Meaning that if I have to buy something I can hold for 10 years, like I'm going to share with you later, then it's going to be something very, very solid. It's going to be a very solid asset that will still be there in 10 years time. Somebody was analyzing today, UBA just 2 years ago was 8 naira. UBA, the bank in the Nigerian Stock Exchange, just 2 years ago, 2023, it was 8 naira a share. As at market close today, it was 37 naira 50 kobo. So the implication of that is, if you had 1 million shares of UBA in 2023, just 2 years ago. Just 2 years ago. If you had 1 million, it would have cost you 8 million naira to buy 1 million shares. Now, today, the 8 million would be 37.5 million within 2 years. That's what I would do. That's what I would do if I'm learning all over again. So I would think long term. And then within the 2 years, like the gentleman was explaining, it's not only that you've made it's not only that your 8 million has turned to 37.5 million, you've also made that initial 8 million from the dividends that they paid you. Because the dividends that they paid, for instance, I think UBA is paying like 5 naira this year from the 2024 results. Please correct me. I'm not quite sure, but I think it's 5 naira. That's already 5 million. And then, of course, they paid dividends last year. I don't know how much it was again. So if they had paid like 5 naira or 4 naira last year, that's 4 million. That's 9 million. So you've made your money back. So that's the way investing works. You have to think in terms of long term. So, and how do you do that? So if I'm going right now, if I'm beginning to invest right now, I'm going to go for what we call the dividend aristocrats. And these are the consistent blue chip companies that pay stocks, that they pay dividends, but they're also very, very consistent. They are blue chip stocks. They are companies that are here to stay. They are doing very, very well. Solid management, solid asset base, solid presence, solid products that won't go away anytime soon. Okay, so that's what I look at. Then solid corporate governance. And of course, your corporate governance has to be solid if you have to play in the stock market. So I'm going to look for some blue chip stocks. If you're investing in Nigeria, I'm going to go for GT Bank, for instance. They have been very consistently strong. I think they released their 2024 results, just incredible. Somebody can check it up and then type. It's like they made 1.3 trillion or something like that. Some massive, and then their stocks are shooting up like crazy because of it. And they're paying dividends. They paid interim dividends late last year of 1 naira. They're paying 4 naira now. So that's like 5 naira. So they're doing very well. So I'll put GTB there. I will put Dangote Cement there. I will put MTN there. I will put Zenith Bank there. So these are some companies, and then of course there are some other companies from different industries in the stock market that have done very well. So I'm going to buy those stocks and keep. I'm also going to think in terms of real estate. A couple of years ago, I bought a piece of land somewhere. At the time that I bought the piece of land, it's been a while though. It was for the 4 plots was like 1.2 million or something. So at 300,000 naira each. As of yesterday, I'm told that the place, that was a while ago, but as of yesterday, I'm told that a plot of land at that location goes for 9-10 million. And I bought this, must have been somewhere around 2007, 2008, somewhere around there. So, that's land banking. So I would also put some money in land banking, in real estate. I will do that. Okay, so that's my step number 2, to build a long-term portfolio. And of course, I will also work hard to live in my own house, not to pay rent, because paying rent every year is it looks small, but it's the enemy of long-term wealth building, especially if you live in cities like Accra or Lagos. Accra is terribly expensive. When I was looking for a house in Accra, and that was quite some time, so I don't even know what it is like right now. Places around airport residential, places around cantonment, places around Roman Ridge were very expensive. You will see 3 bedrooms going for, and I'm not kidding you, $3,000, $4,000 a month in dollars, not cedis, within that airport residential area. I mean, the Ghanaians in the chat, you can confirm that. Just let me know what it is right now. Airport residential, if you're looking for a house there. So you have to put like $3,000 a month, $4,000 a month. Now, in Lagos, it's also as bad. In Lagos, it's also as bad. You know, the estate that we, you know, the family has a place. Just early last year, you could get a flat, a 3-bedroom flat for 2.5 million. Then by late last year, all of a sudden, all hell broke loose. And then 3-bedroom flats, if you get the cheapest one available, is 6-7 million naira. Now, can you imagine what it is that every single year you count 7-8 million naira for a 3-bedroom flat in Ogudu GRA or Ikeja GRA? You count 8 million, 10 million and give to your fellow human being. Why? Because you didn't find a place. You didn't build a place. You bought a car. You bought a car instead of buying a piece of land, you know, where you could have built your house. So that's what I would do differently. Then step 3, I'm going to automate discipline, because investment and discipline go hand in hand. Investing and discipline go hand in hand. In fact, it's impossible to invest without discipline. Type it in the comment section, because I really want that to. It's impossible to invest without discipline. And then one of the ways that you can maintain consistency in economy, very difficult economy like the one we find ourselves, is to automate discipline. How do you do that? Set monthly investment amounts. That every month you are going to do this. So I have my own automation of discipline, that if anything comes into my account, a client pays, a certain proportion of it must go into purchasing stocks. So there were times I was doing daily, there were times I was doing weekly, but every month I must, you know, invest something. So you automate that every single month. So you use what we call dollar cost averaging. For instance, I started buying GTB when it was less than 10 naira. I started buying GTB when it was less than 10 naira. So I bought some GTB at 10 naira. I bought some at 15. I bought some at 18. I bought some at 20 something. I bought some at 30 something. So over the years. And of course, GT Bank is almost 70. It will never go back to 30 something or 40 something. Never. I'm not sure it will fluctuate, but it will never go from the 70 it is today to like 30 naira ever again. So, but because I bought at all those, you know, so I think I have an average of about 40 naira or something, or a little less than 40 naira for my GT Bank. So it's called dollar cost averaging. So it helps you to manage the market swing. So over the years, the average, if you have decided that, okay, like what I do, I pick a particular company that is the, you know, the aristocrat, the dividend aristocrat, you know. So I say MTN, for instance, my target is to own so number, let's say 1 million shares of MTN. And because that's my target over the next 5 years or so, then I just keep on buying. It doesn't matter how much it is. So sometimes I buy up, sometimes it's marked down, I buy down. So it's called dollar cost averaging. And because I'm looking at the long game, so I might buy MTN at 240, 260, 270, 230. But in another 5 years, you're probably talking about, the company does well, you're probably talking about 2,000, 3,000 naira for one share that you bought at 260. So that's why it's important to buy a dividend aristocrat. All right. So set monthly investment amounts, use dollar cost averaging. And then most important, please ignore the noise. All these things you hear, you see on WhatsApp groups, and then you see hot tips on TikTok, and then Facebook and all that. Learn to do your own research. That's the most important thing. The most important investment is here. It's in your mind. Learn to do technical analysis. Learn to do fundamental analysis. So don't invest based on the noise. So if you're going to take one thing from tonight's session, let it be this, that investing in 2025 isn't about luck. It's about strategy. Okay. Now, I have a book on how to invest and earn in the Nigerian stock market. I'm going to put the link under this video. You can actually start from there because it gives you this step-by-step guide on what the stock market is, how to open a stockbroking account, how to start buying stocks from the comfort of your house, how to decide when to buy, when to sell. It has all those things. So I'm going to put the link under this video. You can start from there. And whatever happens, keep showing up because you never know what's coming your way next. And I'm going to see you same time after the weekend. You have a wonderful weekend and good night.